Welcome to another Learning About Loans. Mr. Justin Wood is here today. Justin R. Wood, my man. We were talking golf right before this, but let's get into that stuff that actually matters. We're going to learn about some loans. Justin, what is the topic for the day? What are we talking about?
Today, we are going to talk about gift funds. Gift funds for down payment.
Love it. Gift funds. All right. So um, first of all, for gift funds for down payment, let's establish what is a gift fund. So I know what it is clearly. Well, at least not always, but this case I do know what a gift fund is. What is a gift fund and why do they need it? What can be used for?
Yep. So gift funds are any money that is sent to you into your checking savings account or the day of closing that is not your own money. And it's got to be from a close friend, family member, a sibling, whoever, someone in your world that gives you money that is not your traditional payroll or rent checks that you would receive.
So it's money that you are being gifted. And
Correct.
what the key word there, guys, is the gift. It's not a loan. So Justin, what does, in terms of the money that they're giving you, what documentation, like how do you prove that it's a gift?
Yep. So, well, the first one we often get is when do I transfer it, right? And the path of least resistance is whoever's going to give you money, do not have them move it to your account before closing. So if the second they transfer that to your account, you got to get the donor bank statements, you got to get the check sourced, all that stuff. The best way to do it is for them to wire the money directly to the title company the day that you sign paperwork.
So guys, just to repeat what he just said. Now, again, it's not that you have to do it that way. That is our recommendation for a variety of reasons. It makes your life or anybody involved in the transaction, it makes the life of whoever's borrowing the money, the borrower, makes their life better and easier, makes our life easier from a documentation standpoint. And when it's done properly, it's relatively easy. So there's a couple points I want to make here to really stress and bring home. So let's start just big picture. Justin, do all programs, and it's always a catch when somebody says all or always or never, right? But something that do all programs allow gift funds?
All with an air quote, right? It typically comes to a primary or a second home, right? As far as occupancy type, investment properties, depending on the investor, but for your traditional in the box, Fannie Mae, Freddie Mac, conventional guidelines for investment purchases, they do not allow gift funds as far as their
That's
funds.
right. I
Yep.
remember that this would have been 20 years ago, give or take, when I was first getting in the business. I've been doing this for over 20 years now. So this would have been somewhere around that time period. I didn't know that rule back then. And so somebody
Yep.
tried to get gift funds to buy an investment property, Fannie Mae, Freddie Mac, and that was not allowed. And that did not go well. It's not we ended up getting it done, but it wasn't a good conversation. So Justin's right. For Fannie Mae, Freddie Mac, for conventional financing for investment properties, they do not allow gift funds. It needs to be your money to close for both the down payment and closing cost. There are some investors for investment properties that can and will consider them or use them. So that is something
Right.
to bring up front. But I would say, just as a blanket in general, if you're buying an investment property, it's not an automatic. But everything, for all the other stuff, right? An owner occupied or a second home or vacation home, things like that, it is allowed. As far as documentation, Justin alluded to one thing. Do do all the programs require the same documentation for the gift funds?
Yes, all programs are, well, yes, there's one consistent item with all of them. All of them are going to need a gift letter. A gift letter, it's a document that has just the generic information, just inferring there is no repayment required, first and foremost, right? It's not a gift in the form of a loan, right? It's a gift letter that shows the donor's name, the buyer's name, the amount of the gift, the donor's address, and the bank account and the last four of the account number. So that way they can match it all up to the gift documents at closing. And again, that's for all agencies, conventional, VA, FHA, USDA. They're all going to need that gift letter, which is a single piece of paper that we, the lender, can generate once we put it all together.
And does that need to be notarized?
It does not need to be notarized. Great question.
Okay, does it, and is that something they produce or we produce?
We produce it only because the language required for the agencies to approve the mortgage has the what it needs to say on it. And that's something that we, the lender, would generate.
Yep. So the part I always stress, guys, because we get a lot of questions, especially if mom or dad are helping somebody out, kiddo or somebody buy a home. The questions are always something to the effect of, well, they don't want to sign it because gift tax, and I'm well aware of the gift tax laws and all that go with it. Again, this is for the mortgage. This is not for account. Like, we're not reporting this to the IRS. And I'm not saying you shouldn't. I'm not saying you should or shouldn't. I'm just saying this is to purchase a home, or I
Mhm.
technically you can even use it for a refinance, I guess, if somebody needed. That's not common, but I guess in theory you can use it for refis. But it's money that's being gifted for the purpose of the buying the home, and it is not going to leave our walls in terms of accounting or CPA stuff or whatever. What you guys do, if you're buying the home, what you do is your world. And the other part I like to bring up is the gift letter says there's no expected repayment. Now, if little Johnny gets money from mom and dad and of 20 grand to buy a home, and little Johnny's conscience just eats away at him, and he doesn't want to be awkward at Thanksgiving, and Johnny decides later on to repay mom or dad, that's that's up to Johnny and dad, but there can't be an expected repayment because that would make it a loan. So it has to
Mhm.
say there's no the letter does state no expected repayment, but Justin's right. So Justin, as far as the that's one piece of documentation that's always going to be needed, like I so and so. Now the so and so you mentioned earlier, close friend, family member, things like that. It's changed over the years. Like, it's changed
Right.
2 or 3 times. So I honestly, and I'm being sincere, I can't remember this very second, because you're in the weeds doing all the wonderful work. Do all programs, FHA, USDA, VA, Fannie, Freddie, what are the guidelines? Because it used to be some allowed this, some allowed only immediate. Like, what is kind of the rule right now? And I know it may not be for all of them, but give me kind of a rundown of who's allowed to give the money.
Right. So across agencies, who's allowed? It's going to be immediate family, mother, brother, uh, sister, uncle, dad, even son, daughter, whoever that's immediately connected to you can be an eligible donor. There's also, and this has changed over the years, like you mentioned too, fiance, right, or partner, close friend. Before that was excluded from the language. Now it's actually an eligible source as a donor. And keep in mind, we typically don't need like engagement photos or anything of that nature to document you're together. But certainly everything outside of a blood test showing they're an immediate family member and then putting that on the letter is sufficient for our purposes.
So that has changed. But I remember earlier in my career, Snoop Dogg was really, and I guess he's made a comeback, right? But the reality is Snoop Dogg called everybody cousin or cuz, and I was like,
Yeah,
uncles were allowed or cousins were allowed, and I was like, hey,
sure.
cuz, like, if you got a cousin out there, like, it was getting on that out, but they wouldn't allow a friend, but they'd allow a cousin. Well, how do you prove
Right,
somebody's a cousin? So
right,
I'm not saying that people did or didn't do that, but the reality is it's nice they at least acknowledge if somebody wants to gift you $20,000 or whatever dollar amount, it doesn't matter. Whatever they
right.
want to gift you, good for them. So that does make things easier. I'm glad to hear that. That's wonderful. We mentioned programs. When we say agency, we lenders mean like Fannie Mae, Freddie Mac, and they're kind of
That's
like,
right.
they said it all. And then you got the government side, FHA, VA, USDA. What about jumbo loans? Do jumbo loans allow gift letters the same way that these other programs do?
Yeah, it depends on the investor. Obviously, as far as jumbo lenders, some jumbo lenders want to see you contribute a certain percentage of your own money, right? So some will allow it if, let's say, you're the buyer and you contribute 5% of your own funds or 10% of your own funds, right? Whatever that margin is. But each jumbo lender will vary depending on the program. And now also for the other side of it for investment for non-QM lenders, some non-QM lenders allow gift funds for an investment property, as long as you put your own 5 or 10% down or whatever that requirement is, right, for that amount. So I know it wasn't specifically answered your question, but it does have a common touch point for jumbo to non-QM that a portion can be a gift.
Yeah, the answer is it depends for that, right? So if it's a
Yeah,
jumbo loan, and for those that don't know, jumbo just means when the loan gets really big and it goes above Fannie Mae and Freddie Mac's limits, then Justin's answer is it just depends on the investor. And it's kind of old school in that sense. So again, 15, 20 years ago, and when I first started, 20 plus, but whatever it was, but up until I'd say even last 10, they did require, they being Fannie Freddie at the time, not anymore, they did require, to what Justin just pointed out, to at least have your own skin in the game. So you can get a
right,
gift, but you had to at least have X number of dollars or a certain percentage that went into it. So it sounds like jumbos in today's market, some won't allow it, some will, some might, have a little asterisk and allow it with some sort of requirement. And non-QM, guys, just means outside the box,
Right.
non-qualified mortgage. So if something funky goes out there, again, it goes back to it depends. So the biggest thing that I think Justin and I can really stress to you is help yourself out. And if you do involve gift funds, be straightforward, come out clean, do it in the beginning. Don't wait till the last minute because stuff has to be verified. So Justin, going back to some in the early opening statement, you said it's nice if if the donor would just wire the money straight to title company. If
Right.
that's not going to be the case, what is typically needed? Does it vary based on programs? Like what documentation is needed and how should they do it the right way?
Yep. So let's say the money's already in your account, right? And keep in mind, this could also be a look back before you even call us or the team, right, to get pre-approved. Maybe 2 months ago, someone had given you money, not necessarily towards the down payment, but maybe it was something else. When you had to source a large deposit, which for conventional guidelines, it's if it's greater than 50% of your income, you have to source it. For FHA, it's greater than 1% of the sales price, right? So if someone had given you money
So
two
to
months
translate that,
ago,
guys, just to be very
yeah,
clear before he goes on, it depends on the program, what's considered a big deposit. So just know that
right.
if you got money coming in from non-payroll, you lost, maybe you won some money in Vegas that somebody paid you in cash, somebody owed you money and they gave you 10 grand, you got a lotto scratch off, something somewhere. I'm not saying all those are gift monies. I'm just saying if you get big deposits that are thousands of dollars, talk to your lender to do it right. So Justin, to your point, let's say there is something showing up on a bank statement now that we're going to say Joe Buyer. Joe Buyer has 10, 20 grand. I've been saying that example. So let's just use 20 grand. Joe Buyer's got 20 grand on his bank statement. What do we do now?
If he's got 20 grand on his bank statement and maybe it wasn't intended that way, maybe it was from mom, dad, sister, whomever, right? You have to source it and you probably need a gift letter too, right? So same thing, even though it wasn't intended as a gift as such, anytime the money is transferred to your account, just like it would apply if they had transferred it to your account prior to closing and you are under contract, you're going to need a proof of the transfer. And then in some cases, you're definitely gonna need the gift letter, obviously. And in some cases, you're gonna need the donor's bank statement showing the money coming out of their account.
That's the key, guys. So three things. The gift letter we've already talked about, right? The lender provides it, fill in the blank. I, mom, give son X dollars from this account, no expected repayment. Like that's the gift letter. When Justin says source the down payment or source the money, that means that I got it. Joe Buyer has to show the 20 grand hitting the account. And, where did that money come from? That's sourcing it, which means to source it, if you got it from mom, we got to get mom's bank account. And that a lot of times is the bone of contention. Like, well, she's not on the loan. She doesn't want to give it. Like, I'm not doing it.
Right.
Hey
Yep.
man, I love you and I wish we could, but I don't write the rules. No lender writes. Like lenders don't want to say this, and it's not like we can go to our boss and it's like negotiating. Like, can we please? The reality is, it's part of the Patriot Act. We got to make sure that we're not selling drugs and guns to raise this money. So what we got to do is get mom's bank statement showing money has left that account and gone into, in this case, Joe Buyer, his account. And by the way, if mom's got a 20 grand deposit the day before showing up on her bank statement that she provides to us, more questions get asked. So at the end of the day, this can be annoying to do gift funds. Justin, if mom would have just wired the money straight to title, would we still need her bank statement?
For conventional loans, you would not. And that's conventional, regular, agency paper, right? For FHA or government-backed securities, right? For FHA, they'll actually accept a 1 day bank statement, which essentially, as long as it shows the donor's name, the account number, and the available balance of the funds, you can get away with what's known as a 1 day bank statement. Now,
I did not
some
know it was one
banks,
day. That is awesome.
yeah,
That's way better than it used to be. So that's good.
some banks don't have that though, right? Some only like yeah, that's the other part too, right? Some like a credit union, they may just have the good old monthly statement and that's it. Some will have like an activity for like a small window of time, just showing that they have the ability to give. Because remember, they have to match up the account number to where the money's coming from with the gift letter. And that's just for government-backed securities. And before, with FHA or VA or the government-backed securities, before they didn't allow the 1 day bank statement, right? To your example, they'd have to go back, get the statements, and then question any large deposits coming into the donor's bank account, which just became a mess. So the government agencies came out and said, we'll accept a 1 day bank statement. as long as it's got name, account number, that stuff on it too, as long as to show they have the ability to gift the funds.
So
Right?
let's keep going down this road here. So Joe Byer just got 20 grand from mom,
Mhm.
and we just got mom's bank account to proof and source those funds. Mom's bank account has Kevin Jones. Mom's last name is Smith. Kevin Jones is on that bank account. Is that a problem?
It used to be. Now I wouldn't see that as a problem.
Good. I didn't
As
know
far
that. So
yeah, so as far as allowing, like saying, oh well, they have, I give them permission to gift this fund from this bank account, right? It's a great example. But a lot of the times, if you've got joint access to the account, I don't need an explanation letter to go get permission to gift these funds to this person, because you could go tomorrow and withdraw all the cash from the account if you wanted to.
news. That's great news. I mean,
Yeah.
for those that don't know, the reason why I asked that question in the quote old days, if you got Jill and Kevin on the account, and Jill was mom giving the money, we got to figure out who the heck Kevin is, and we got to get Kevin's permission, because if they're both on the account, we got to get Kevin's permission that 20 grand just left. So sounds
Yeah.
like that's not the case. That's wonderful. It's
Yeah.
good that we got great folks here like Justin who know what the heck they're doing to make sure that we're good on that. Let's see. Okay, so let's recap. A gift is money that is coming from an individual. Can it come from a company or an entity or some sort of what do they call it? Not a natural person. I don't know what the real word is, but can it come from somebody,
Right.
not an individual?
You can, yes, but there has to be a documented relationship, right? Like, why are you getting this money, right? Or do you work for the company? Is it not in the form of a payroll deposit? It's just a one-time, deposit for X reason, which we do see that for some relocation packages, right? Somebody's moving across state, same company, where they'll say, we will give you X amount of dollars towards, moving expenses, things like that, but they wouldn't call it a payroll deduction because nobody wants to pay taxes get taxed in your payroll just to pay your movers after money that's already been taxed, so they can get taxed on it too, right? So normally, sometimes business entities can pay directly to the buyer if there's a documented relationship, right? It's not like you work for mom and dad's company and they're just writing a gift from the company for 100 grand or whatever the amount is too, right? Just
Yeah, it
because
gets
it's
tricky.
qualifying.
It definitely gets tricky. So again, guys, the gift in theory is again somebody that's a personal contact gifting you money or gifting the buyer money to move in. I have seen in Justin's example about when we do see it coming from a company, and I think I've even seen it come from a church long ago. But
Mhm.
these are small individual, like the church wasn't some big mega church. It was, this pastor was the guy's best friend, and there were 10 people in this church. And they gave him like 5 grand. It was enough to say we, the church congregation, give this minister. And again, it's not payroll. You think, well, just give it to them in a payroll. But again, it was just the way they're structured. That's the way it worked for them. And we got the ability to say, like, here's who it was, and this is why they give it. But I would say for the most part, let's try to keep it as a natural person. The business relationships, again, it gets tough because now it looks like income, or it looks like a bonus, or it looks like something of the nature. It's not to say we can't work around it. We're just trying to say, like, here's the path of least resistance. But again, it's kind of that gray line. Is it a gift or is it, income? And technically kind of shouldn't matter. And it doesn't, right? Because if you get 20 grand put in your bank account, where it came from in terms of like, whether it's a gift or whether it's your company, it's still money that's green and can be used. It's just, it all comes down to paperwork. It all comes
Yep.
down to what we have to need and what's easiest for you, what's easiest for us to get it through the fastest, where we're all being honest and truthful and accurate, right? That's that, just to be very clear. But it's how do we structure it to where this money works? And then to Justin's point earlier, you said earlier, I don't remember exactly the exact wording, but you said if it's in your account. If it's in your account, and I'm asking a seasoning question for those that don't know what it means, Justin does. Like, if it's in my account, do I need a gift letter? Like what, or do I always need one? Or what if it's in there for a while? Like what, tell me more about seasoning, what that means to Joe Homebuyer.
Yeah, so anytime in most examples, let's say you get a contract tomorrow, right? The lender's going to require your most recent 2 months of bank statements, right, in order to approve the loan. Now, maybe like today, we're shooting this video, it's towards the beginning of the month. Maybe your next new statement hasn't come out yet, but the deposit's from 3 months ago, right? We're not going to retain and keep that statement from 3 months ago because from the lending side, right? Just being transparent, I only need your most recent 2 months. I don't need a statement from several months ago, right? To question that deposit. So to answer your question, I would only need to get a gift letter if the deposit was in the most recent 2 month window to be required to approve your mortgage, right? Now, let's say you deposited it yesterday. I'm probably going to need a gift letter, right? Because that falls within the 60-day window of most recent to current, right? For the timeline we need.
Do they? So again, and I keep talking like I'm so old, and I'm starting to feel it these days. But the reality is, do they still look at the previous month's balance and look for big discrepancies? So in other words, I used to say the gift funds to be like air quotes hidden, and I'm not trying to hide. I'm just saying for where we don't care about it. My answer was always 90 days. If it's long past 90 days ago, like if you put 100 grand from grandma into your bank account 5 months ago, I don't care. Like at that point, that money's quote yours, and I don't need a gift letter. I don't need anything because the money's been there long enough. It is seasoned to be in that account. So, Justin, my question goes back to you. In the old days, the reason why I would say 90 days, because in your example, if you give me 2 months, that's call it 60 days of coverage. Well, if you deposited 70 days ago, the bank statement you gave me says previous month's balance or whatever it was, average month's balance or something, and they would see the big jump from 1 month to another as far as what the balance was. Is that still a thing, or am I just getting old?
You're not getting
Or
old.
both, if those are not mutually exclusive. So
I think it has more to do with how the depositories report their monthly statements, right? Some of them do an average running balance, right? Well, let's say, oh, this is the average balance over the past 90 days, right?
right.
Some of them don't list anything at all. They're only required to list name, full account number, and activity in lieu to the period that the statement is covering, which if it's a 30-day statement, sometimes they're not going to report an average running balance or like a year-to-date balance, for example. But to your point, if they did report that, hey, there's been a significant increase in average running balance, I don't know why they would keep track of that data, but maybe they do. If it's like a money market or some sort of like brokerage link account, but your traditional checking and savings accounts are not going to report that. But if they do,
Right.
and there is an average much higher increase than worst case scenario, if they need a statement from 4 months ago, you got to get the gift letter. Fine, we'll do it.
Yeah, I'd say just know this, guys. Like the sooner you put it in your account and the more time that goes by, the less likely the lender's going to even know or care. So if it's beyond 90 days ago, it'd be a hard scenario to figure out why we would even know about it. But to Justin's point, there are institutions out there like money markets or bond, brokerage accounts where maybe they only give quarterly statements. And so maybe when that came out, they saw when that hit. So just understand with the gifts, again, we're not saying gifts aren't allowed. We're not saying you shouldn't do them. We're just saying, based on this conversation, you can tell there can be instances where it's just not clean and easy. It just requires more paperwork, more conversation, and that's not a problem. It's just don't wait till the last minute to do it. So if you think you need a gift, we would always suggest and recommend do it soon, do it early, get the money, and then you know you're good. And if you don't need it, because you did get that bonus or that big sale closed and you got a commission and something you don't need it, fine, but at least have it ready and have the paperwork available so you're not just putting yourself in a crunch and making us look bad. So
yeah, and I will say too, it has gotten a lot better, right? As far as the documented gift funds, and I've been doing this 14 years, right? And it used to be super tough, right, to get any kind of gift document whatsoever. But a testament that it is getting better. This is a nice tie-in to the video we shot a few months ago about Home Funded, right? Which is basically a crowdsourced DPA, which is essentially just a gift, but from multiple sources, right? And that's a product that we do here. So that is a sign that it is getting better and easier to document gift funds because there's no way they would allow that product 5 or 6 years ago, right?
true,
There's no way.
true. All right, team. Well, Justin, any last closing thoughts on gift funds? Something we didn't cover. I think we hit most everything, but is anything else you want to touch on?
Yeah, just get ahead, stay ahead, right? Especially with these conversations on gift funds, particularly if you have a donor identified, talk to us early. Don't wait until they're writing a snail mail check 3 days before closing to verify your gift funds, right? Let's talk about scenarios, talk through them together, and before you click transfer or mom and dad or gift donor click transfer to that account, just make sure you know that, hey, the second that little click happens, just know there's a lot more paperwork involved versus just doing it the path of least resistance as well and making it just an overall easier process for you. So that's it.
Preach. Justin, buddy, as always, thanks for having you. Thank you for watching, learning about loans. We will see you on the next edition. Have a good one. We appreciate you.